Events happen that change our lives. Dealing with change is what we do. We discuss with industry professionals objective solutions to work through cherished items and family memories. When we go beyond the gavel, we provide tools and information to deal with these crisis times.
Hello, I'm Shane Feely with Auction Solutions. Today we're going to go beyond the gavel with Doug Quinn from McGrath North. Doug has conducted bankruptcies for creditors in over 50 states and internationally in every country you can imagine. Doug, we're so glad to have you with us today. Tell us a little bit about yourself.
Okay, thanks for asking me today. I
You
appreciate
bet.
it. As you mentioned, I've done bankruptcy work since 1978, and that's an important date because that's when the bankruptcy code was amended. Before that, it was the Bankruptcy Act, so that changed everything. And as a first-year lawyer, I got thrown into it because they decided, well, somebody's got to figure this out.
Sure.
So I've been doing it since 1978. I started out with a smaller firm. In 1986, I was asked to join McGrath North, where I've practiced ever since. I've practiced, as you mentioned, in all 50 states. I've been in 48 of them physically, but I've had cases in all 50. We've also done some international stuff. There are Chapter 15 cases. I've represented trustees, creditors committees, equity committees, individual debtors, corporate debtors. Even had a train case one time.
Great.
So I've had a lot of background in a lot of different areas of the bankruptcy experience.
Well, so thank you so much for coming on here, because some of the things we don't understand when they talk about going bankruptcy, there's a lot of myths out there. We're talking today about the creditor side. What are they looking for besides some kind of financial? What other things are they looking for to get through a bankruptcy?
Well, when you're a creditor, and let's say a typical example would be a bank, this was going back a ways, used to be some banks would loan unsecured. They would not take collateral for it. Even into the farm crisis, there were banks that I represented that had large loans, maybe $2 or $3 or $4 million. They had no collateral, it was simply on a handshake or a piece of paper. But they're looking to recover generally, and usually banks will have a collateral package. It can vary. It can be a lot of different things. It can be real estate. It can be, if you're a manufacturing debtor, it could be your inventory and accounts receivable. There's been we even had a case, one of my partners had a case up in Colorado where the collateral was bull semen worth about $2 or $3 million.
Wow.
So it all varies. But all the creditors are looking for generally are recovery of their debt. Now, sometimes that means you've got to be very hard-nosed and just try to seek to liquidate. But many times it means working together, finding a way to put together a package with the debtor so that there's a chance to recover, the debtor can come out of it and still be able to pay you. So it just depends on the circumstances and whether or not you've got an honest debtor or if you've got concerns about their truthfulness.
An ability to perform.
Yes, yes.
So when you are a creditor, when would you hire a trustee?
Trustees are not hired by a creditor.
Oh.
The system as it works in the United States is there is an adjunct of the Department of Justice. It's called the United States Trustee Program. Jerry Jensen runs the office here in Omaha. But it's an adjunct of the Justice Department, and they oversee all the bankruptcy trustees.
I see.
There are panel trustees that handle the Chapter 7 or liquidation cases. There's a standing Chapter 13 trustee, which oversees the Chapter 13 they used to call them wage plans. And then there's a Chapter 9 trustee in any state that's got a significant amount of agricultural activity. Okay. And all of those trustees are appointed. Now, there are procedures for electing trustees. If there's a case filed and the trustee that's appointed is not somebody that the creditors like, there is a process for voting in a different trustee. Doesn't happen very often. I've seen it happen 2 or 3 times, but generally you get a trustee appointed by the U.S. Trustee's office.
Okay. And to be it, what are some of the jobs that person would do, that trustee?
Well, they will seek to, well, the first thing they do is they hold the first meeting of creditors. That is the first experience that most debtors have with the bankruptcy system. And they come in, and they're not in front of a judge, but they're in front of a trustee. They're put under oath, and then the debtor or a representative of the debtor, if it's a corporation or an LLC, will testify as to the assets and liabilities of the company, business operations, and so on. That trustee will then go out and investigate. He'll kick the tires, try to see if there are other assets that may belong to the debtor other than those that are disclosed in the schedules. That trustee may look into the business, if there's an operating business. I just completed a case out in western Nebraska where the Chapter 7 debtor operated, or excuse me, the Chapter 7 trustee operated the business for about 9 months after it was converted to a Chapter 7. But they'll go out and they'll look at everything, they'll gather up the assets. They may hire professionals, they may hire auctioneers.
Sure.
We had a case a long time ago up in Michigan where the trustee, who was a gentleman by the name of Merle Nicola, who's since deceased, hired an auctioneer for a company called Pride Foods that had meatpacking operations up in Michigan. The trustee unfortunately absconded with the proceeds.
Oops.
And so you got to be very careful. But you also, in addition to auctioneers, you would hire an attorney to help you with the legal aspects. You might hire an accountant to help you prepare tax returns for the debtor. But the trustee basically gathers up all the assets and then seeks to distribute them to the creditors.
Wow. One of my friends, Tom Claybaugh, when he first started in the banking industry, bankers went and prepared the auction site, and then they clerked and collected all the money and all the payments. And we've come a long ways from those days. But how do you keep that from happening, the money being absconded with?
Well, you just as you would hire somebody in outside of the bankruptcy process, you check with the Better Business Bureau. You may check with previous employers of that person. Sure. And you try to get provision made in the papers hiring or authorizing that person to protect you in the case that something does happen down the road.
What would be the next step? So the trustee has met with the debtor and the creditors. Then what is the next step?
He would, as I said, collect the assets, liquidate them. There may be assets like bank accounts. The debtors generally, if they're individual debtors, you get things called exemptions. And they get to keep some of their property. So only property that is not exempt may be used by the trustee. In Nebraska, for example, if you own a homestead, you've got a $60,000 exemption. So if the house is worth $300,000 and you owe $100,000 on the mortgage, you would get to claim another $60,000 out of the additional proceeds. So only the amount above that $160,000 would be available to the trustee.
I see.
There are also exemptions there's a wild card exemption, which you can use for personal property. There are exemptions for tools of the trade. There are a number of other relatively minor ones that relate back to our agricultural past.
I see. So if I was a plumber and my company was closed and I was in bankruptcy, the tools that I would use would be exempt from that?
Up to a certain amount. I think it's about $1,500. Okay. Don't quote me, because they change those statutes every now and then, but I think it was like $1,500. So if you were a plumber, that'd let you keep a significant amount of your equipment.
So that you could, if you could go back into business again, you could start over again if that's what you chose to do.
Yes, that's correct.
That's nice that there's some options there. What other things are important from the creditor side, Doug?
Well, it depends. I mean, if you're in a Chapter 7 case, what you really are doing is you're hoping the trustee does his job. You file your proof of claim. If you're unsecured, you just file your proof of claim. And the trustee, once he gets through the process of collecting the assets, then looks at the claim, see if there's any basis to object to them. Sometimes, for example, there are numerous claims filed by a creditor. I find that often to be the case with governmental entities. The Department of Revenue might file several proofs of claim, they overlap. The trustee, he'll object to them if he can't get it worked out. And then you'll just look to get paid. If you're in a Chapter 13, it changes, because a typical example would be that you would be a bank that had financed a motor vehicle. And Chapter 13 debtors are often in arrears on their payments. And you're going to want to get them caught up. You want to make sure that they've got insurance on the vehicle. And if they're going to get a plan reorganized, that it's something you can live with and yet you feel comfortable you'll get repaid.
Sure. It seems to take a long time to get through a bankruptcy, and I'm sure it's because everybody's investigating and looking and finding. And I heard you mention something about object to the taxes. Would that mean that an IRS lien or something like that would be, those don't ever go away, do they?
Oh, they can. Taxes are kind of complicated. Certain types of taxes can be discharged and certain types of taxes cannot. And the circumstances vary, but for example, if you're an employer and you haven't been withholding payroll taxes for your employees, those kind of taxes generally don't go away and you can't discharge them. But many other kinds of taxes you can, although if there's a lien out there and it attaches to an asset like a piece of real estate, a house or a car, those are generally going to stay there as liens until they're either paid off or somehow addressed through a plan of reorganization.
Oh, I see. That's very interesting, because I know they always say the one thing that's for sure is death and taxes. So
That's true. And taxes are very difficult to deal with on an individual level. I've got a number of clients that have tax issues right now, and they're hard to deal with.
one of the things that I see, and when we go in, when we've been contacted by a trustee or an attorney or the owner, is that they have spent every penny trying to stay open. And what are some of the common mistakes that can be made?
Well, a lot of my practice now is representing debtors in either Chapter 11s or workouts. And too many of them come to me when it's way too late in the process. My personal term for it is the ostrich syndrome, and people tend to stick their head in the sand and hope that it'll all go away. Whereas you're much better off, if you think you got a problem, getting out in front of it. And sometimes I'm lucky to have clients that do that, where we've still got a lot of equity, we've got some options, we can maybe approach the creditor or creditors and work things out. But a lot of times you're right, people just wait too long and they're scared. It's a normal reaction, I think, but it's not an appropriate reaction from a business sense.
No, it wouldn't be. I know sometimes they've spent their 401ks trying to keep their employees working, and I know that it's important for an employer to be loyal to your employees, but at some point you have to realize that the end is near.
Right, and you got to be careful around things like 401ks and other types of retirement products, because those are generally exempt. There was a lot of litigation in the 80s about how much you could keep of those, but generally, unless you've got a lot, and I mean a lot, socked away, those are generally something that you can keep even if you go through a bankruptcy process. So if you're going to use those products, number one, you want to make sure you keep enough that you can retire and you can go on. And number two, many times when clients use that, they don't realize there are tax consequences.
Oh, sure.
There are penalty provisions that kick in, and so you got to be very careful about using that kind of material.
So you could end up with a real double whammy at the end of that, wouldn't you?
Yes, you can.
So in your experience, kind of walk through what suggestions you would make from, you mentioned some people do come to you with equity and they can see that they're having some difficulty. What would be the smartest aspect or the path for them to walk?
I need for them to tell me what their ultimate end game is. If it's to get on with their life and they're not so worried about keeping their business, that's one thing. If they want to keep the business, then we need to think about how are we going to restructure that business to get the debt to a manageable level. And there are ways to do that where you might be able to turn some of the debt from secured debt into unsecured debt. There are ways where you can reterm debt. You know, sometimes lenders would be willing to refinance you and put you on a longer term. You just got to think about what you want for your end game. And if you want to keep your business, it's more difficult than if you just simply want to liquidate it and get on down the road.
So if I had a business and I put someone in charge and I went on my merry way, but I was checking in frequently, how do I know that something's going wrong all of a sudden? You know, it kind of creeps up on people, I think, sometimes, that there's something going wrong in the offices. What's the easiest way to look for trouble on the horizon?
When you can't pay your current bills. I mean,
Okay.
when you're falling behind, and for example, if you had a business that relied upon buying materials they could use to fashion into something, a supplier of business supplies or something, if you can't generate the cash to buy new inventory, that's a problem.
Sure.
If you're having problems making your payroll, that's a big problem. If you're having problems with your taxes and you're not be able to pay your taxes on a current basis, that's a big problem. And those are signs, that you're getting in over your head.
Right, and so if I'm living on an island in Panama somewhere and I'm checking into my books online and all of a sudden I'm starting to see some errors, that's time to call you, isn't it?
It's time to call a professional. Yes, it is. And
Somebody involved.
it may be that you can do all this outside of a bankruptcy. Maybe you can, oftentimes you can work things out if you go to the lender and just be honest with them and say, look, we've had some bad business because of, it could be something seasonal, it could be something like the Great Recession in 2009,
Right.
when a lot of people stopped spending. I had a client then that owned a car wash, and people stopped washing their cars.
Wow.
Because they were all scared. Ultimately, we had to liquidate that one, but we worked for a time trying to reorganize it and refinance it so that it would work. Ultimately, that client decided that, you know what, I'm tired of subsidizing this business, and I'm going to have to subsidize it for at least the foreseeable future, and I'm better off just shutting it down.
Wow, that's a great idea, and it's got to be hard for people to get to that point.
It is difficult.
It is.
I think one of the best things that I can bring, I try to bring, is to let people know this isn't the end of the world, and you'll get through it. And people they panic. I've had clients, builders, for example, that think, well, now my business went down, everybody's going to think terribly of me for the rest of my life. Well, you're not that important. And after a couple of weeks, that's old news, and nobody remembers and nobody cares.
No, they don't. We've liquidated some very high-profile auctions, and there's still a little rumbling about it, but everybody's moved on about their business, and that's absolutely right. But I think we fear that being chastised or, the public appearance.
People feel a sense of shame, and oftentimes that's just not appropriate. I mean, if for example, you've been ill and you haven't been able to attend to business as you normally would, that's not your fault. And people tend to blame themselves when sometimes the factors are brought on by things way beyond their control.
Yeah, that's absolutely right, and I know we've seen a lot of that as well. What does the future kind of hold out there? Are you kind of forecasting a little bit for the next 10 years as far as economy and how things are going?
You're probably asking the wrong guy, but I think the ag economy has been really difficult, and it's going to struggle for a while here. That's going to be one thing. I think we're in for some bad times down the road, and because I think a lot of businesses have been propped up by very low interest rates, almost artificially low interest rates. And so we haven't had, bankruptcy has not been as busy the last few years as it was back in the 90s, for example.
I have seen in the real estate industry this year, the last few years, houses selling very quickly overnight, buying them without inspections, no insurance policies to make sure that it's a good place to live. And I think it's just because people really wanted to buy a house and they might have put offers in there 3 or 4 or 5, and they're buying them as is. And that I thought we were always going to kind of protect those home buyers, especially the first-time home buyers. It seems like we've gotten a little away from that, maybe, and I don't know why.
I think, not my wife, but some of my family members watch those shows about, flipping homes,
Right.
and I think people think it's a done deal. Well, the real estate market, as you mentioned, is pretty good right now.
Right.
But if you look back historically, things go through cycles. I noted early on that there was a cycle of when the law of receiverships experienced a lot of growth. In the 1890s, there were a bunch of financial problems. In the 1920s, there was another spurt of development of the law of receiverships because at the end of the 20s. Then we had the farm crisis in the 70s,
Right.
and it was crazy. I mean, we were so busy, it was crazy. We really haven't had, well, I guess, we had the Great Recession, but that wasn't the same significant event. We had the housing collapse there for a little bit from the subprime mortgages, but I think we're due for another down cycle. Not necessarily this year or next year. Economy seems to be pretty strong right now.
Sure.
But I think we could see one in the next 10 years.
Now, that's probably true. You mentioned receivership. Talk about receivership.
Receivers are appointed generally under state law. You would have somebody, a typical case might be a hotel. If the buyer's in default, the creditor can seek to have a receiver appointed, and one of the jobs of the receiver would be to collect the rents. Sometimes they're used in agricultural operations as well, where you have them collect the proceeds of a farm operation of one kind or another.
Oh, I see. So they're pretty helpful to
They're kind of like a state court analog to a bankruptcy trustee.
I see. Okay.
And they're generally not allowed in bankruptcy. There was a case I had back in the mid-'80s. It was the largest ag bankruptcy in the history of Nebraska, at least till that point. And it started out with receiverships, and then a bankruptcy was filed and the receiverships were terminated. And I haven't seen a lot of receiverships since then. We were involved with one a couple of years ago on a motel operation here in Nebraska, but that one was terminated pretty quickly.
Wow, okay. I just wondered, because I know I've heard these words through the years, and you don't always know how they're fitting into the plan.
Sure.
So thanks for explaining that. One other thing I wanted to ask you, if the one thing that I could do to avoid a bankruptcy, besides just have good business and use my advisors and have people holding me accountable, what's the biggest mistake that you feel that people could avoid, should avoid?
Well, if you want to maintain good relationships with your lender, be painstakingly honest and open. I've found that if you have open communication with people, you can get things worked out. One of my mentors was a guy named Jim Larson, who was the first man to liquidate a PCA, a Production Credit Association, a Farm Credit Association.
Wow.
He did one out in Oregon, then he did a couple in Nebraska that we worked with him on, and then he did 3 or 4 down in Texas that he had me come down and help on. And his approach was always go to the lender or go to the borrower and say, tell me how you can repay me. And then he'd say, okay, now build in a fudge factor, maybe 10%, because there's going to be mistakes and I don't want you to fail. And he would let people do that, and they'd build a plan, and if they repaid it, they were friends for life.
Wow.
And if they didn't, at least they had a sense I was given my shot.
Sure.
And so that was an approach that I'd never seen before. A lot of the lenders I'd worked with before were just collect, collect, collect. His was more, let's work this out, see if we can find a common ground to move together. And he was very successful at it.
As the banking goes online more and more, there's been banks bought and sold here lately by strictly online banking. How are we going to keep those relationships with those bankers?
I think it's going to be more difficult. Although, while there has been a lot of online banking, there's also still that community bank presence, and there's that branch bank presence. I sometimes wonder how all these branch banks can exist. I don't know how they make enough money to generate the income for these physical facilities all over town. But so I think they'll still be there.
Still have those banks, because I know when I go in, there's hardly anybody in there. But when I go in, it's because I really need to talk to somebody about something, whether it's they set me an alarm that something's happened on my account, or I just needed to talk to them about something else. So I always kind of wonder how that's going to go. I know auctions have gone from live, especially household auctions have gone from live to mostly online, and that's across the country. So with the banking online, we're losing that communication, that ability to communicate with those bankers.
I agree. I hope they maintain a presence, because that human connection is often crucial.
It's always going to be, and it would be sad to have the only connection you have with your bank when you're sitting in that room full of creditors.
Yes.
Kind of scary. Anything else you'd like to tell us today, Doug? About being smart and
I think you made the point earlier, don't wait until it's too late. If you think you got problems, go and consult a professional on the front end. Don't wait till it's a crisis, because that's difficult to deal with.
Yep. And as always, call an attorney, because I always advise professionals. I don't advise doing anything else, because you and your specialty, you're going to be the one, you and the people like you that are attorneys that are able to help these people out of there, hopefully with some semblance of life afterwards.
And do your research. Look for somebody that's experienced in bankruptcy and workout matters. There are some people that dabble in it, and it's I'm not saying it's rocket science, but it seems like voodoo to non-regular practitioners. And so get somebody that knows what they're doing.
Do you use appraisers?
We use appraisers a lot. You know, we don't just always do bankruptcy work. A number of members of my firm do work with banks, and they use appraisers in putting together loan packages and such.
Do you find that the USPAP certification or qualification is becoming more and more important to the appraisal process?
I think that'd be true.
I think it is too. We've had some IRS appraisals lately that we've had to go redo because someone had done them, maybe that sold equipment, and in the past that's always been okay. But now they're looking for the USPAP.
I would agree with that. I would agree with that. It's just a higher level of certainty.
Well, maybe, yeah, I think that's great. Ladies and gentlemen, I'd like to say thank you to Doug Quinn, McGrath North. Any questions? You're going to find Doug's number at the bottom of the page. Thanks, Doug.
Thank you.